Thank you for tuning into the Alt Fund Investment Podcast. Please like and subscribe if you find this information helpful. We connect investment fund managers and service providers. This content is for informational purposes only. Welcome to the Alt Fund Investment Podcast. Today we're here joined by my friend Brad Janis, Vice President at Midland Trust Company. Midland Trust Company is an alternative investment custodian focused primarily on self-directed IRAs, and we'll get into the details of what that means. But Brad, thanks a lot for joining us, man. Great to see you.
Yeah, happy to always see you, Mike, and happy to be here on the Altcast. I'm excited. This should be fun.
Yeah, definitely, man. Just to kick off the conversation, tell us a little bit about what you guys are doing in Midland Trust.
Yeah, so Midland Trust, which I've been at personally for 13 years, we're a custody services provider to investors of alternative investments, and so that takes on a lot of forms. But we provide custody services to funds investing in privates and trying to adhere to the custody rule. We do self-directed IRAs and 401ks. We're a qualified intermediary for 1031 exchanges, and we do some escrow services as well. But most people know us through our self-directed IRA services. It's definitely our more high volume business that people just know and use us for. But we're an employee-owned company, been around since 2002, serving over 20,000 clients with $5 billion in assets. Hope that covered it.
Yeah, definitely. So tell us, what is a self-directed IRA and how is it different, from a standard IRA that most people would open up at, big trade shop like Fidelity or Charles Schwab or something like that?
Yeah, no, it's a great question, common question, because self-directed IRA can honestly mean so many different things. So to be honest with you, I almost hate the term, but with that said, really what it means in the Midland world, I'll kind of start with a story. So, I graduated from Purdue University and with a finance degree, trying to get into, get into wealth management. And I graduated college in 2009, which was pretty much the worst time to graduate college, except for maybe the newer people in the COVID era. But if you're trying to get a finance job, there basically wasn't any out there. And here I am, like cold calling on finance firms, just trying to get somebody to talk to me that's not about to go under. And I find this company, Midland, and kind of smaller at the time, growing, and they offer this concept, self-directed IRAs. And I had really no idea what it was because at Purdue and almost any university, all they're ever teaching is portfolio construction through stocks, bonds, mutual funds. And here I am interviewing, and they're like, asking me, do you know what a self-directed IRA is? And I'm like, maybe picking your own stocks or picking your own investments. And they're like, yes, but we do it in a different flavor. And I was like, well, what does that mean? And they're like, well, did you know you can buy real estate in IRA? Did you know you can invest in your buddy's bar with an IRA? Did you know you can invest in the next phone app with an IRA? I was like, no, I really didn't know that. And basically just dove right in, was fascinated with the concept. And so really what a self-directed IRA is it's an account or an avenue to allow you to invest in the private markets. Okay, so most companies, like the Schwab's, Fidelity's, TD Ameritrade's of the world, those institutions are great for allowing you to set up retirement accounts, put money away, but then they're set up to allow you to invest in the public market. So think, public exchanges, Apple stock, IBM stock, mutual funds, ETFs, that kind of thing. But the moment that you want to invest in something private, they're not as well equipped to allow people to do that. So we come in as an alternative solution to allow you to set up an IRA account, transition some money over from an existing retirement account, and invest that in a different way. And that different way is effectively into private or alternative markets. That makes sense?
Yeah, you nailed it. I think that makes a lot of sense there. Now, with the what's the big difference there? Is it like the custody aspect, like in terms of like we said, open up your Charles Schwab account? Is it that they don't want to custody those assets, or how does that look like?
Yeah, no, it's a pretty common question. So yeah, so a custodian, and at its core is an institution that accepts money and then provides you access to a marketplace, right? Some sort of market, all right, and that market is really just deemed by what the institution feels comfortable with. Okay. And when you look at a company like, the bigger names, they take on, most of them are really big, and they take on a lot of regulatory risk. They're managed by every regulatory body that there is. They take on a lot of advisory work. So they have a tons of kind of fiduciary responsibility, and all these layers of kind of compliance that they need to care about. So to answer your question, a Schwab or Fidelity could actually allow you to invest retirement money into private markets anytime. They could flip the switch tomorrow if they wanted to. But because of all those things I just mentioned, they've really just made the business the choice to kind of stick in the public markets and provide those advisory services around kind of with the more cookie cutter portfolio construction. And it's just not really something that they're all that interested in doing. And so that's effectively why we exist here at Midland, is you know to just kind of provide that alternative solution for people that want to do this. And we are a custodian that feels comfortable in the private markets, and we build our business accordingly.
Got it. And now you guys do a lot of work with different fund managers. How could a fund, utilize, your type of services? What does that look like?
Yeah, no, another another really good question. Um so let's just kind of talk about self-directed IRAs in general before I get there. So when you think about who wants to use a self-directed IRA, it's usually somebody that has access or interest or knowledge of the alternative markets, okay? Which really isn't everyone. Okay, most people, if I found somebody on the street today and say, hey, you could use your IRA to invest in a startup or invest in real estate, or a tax lien or something like that, um, you'd probably get, oh, that's cool, but I don't really know anything about that. That's the vast majority of the public, and that's fine. There's a lot of people out there that have a lot of other things to do. But then, so there's those people out there that do, that maybe they're professional real estate investors, or maybe they're real estate investor hobbyists, or maybe they have connections to people that do startups, or maybe they have an interest in cryptocurrency and want to buy and sell Bitcoin. There's a lot of there's a lot of avenues where people may just have some interest, and or also the wherewithal to want to take kind of control of their own money and do some different things with it. And so that's one segment of people that use us. And then when you talk about the fund managers, they are the alternative investments out there. So if you're a private equity fund, or a venture capital fund, or a hedge fund, or a real estate fund, you are a private investment. And so when you look at the market of who your investors could be, you have your institutional investors out there that, their interest is already there. But then you have all these other individuals that, might be intrigued with the idea of an alternative investment, but really don't know a whole lot about it. So if you're a fund manager, that's effectively like, this pool of untapped, you know, allocation resources, right? So if you're out there talking, to friends, or just at a barbecue or whatever, and you offer some sort of alternative investment, odds are you're going to be talking to somebody that probably has a retirement account, and probably has a retirement account that's sitting in very traditional, very liquid, stocks, bonds, and mutual funds or whatnot. And they may really like the idea of doing some sort of alternative investment. And the fund managers can be there to really bridge that gap and educate them on what an alternative investment is, how it's different, how it can make them money, and maybe different correlations and whatnot. And so that's really it. For a fund manager, retirement accounts are like another bullet in the chamber to raise money. And the vast majority of the public probably really hasn't even paid attention to their retirement account. They just stuck it in and let it roll for years, decades, whatnot. And it's just this untapped resource that's just kind of sitting over there that the individual probably wants to tap into and put to work in a different way, but they just don't know how. And then the fund manager obviously wants that money, because that's the name of the game of being a fund manager. You need money to make money.
Yeah,
So
I can see
it's a
that. So that could be a really good way for a lot of different fund managers to just increase their AUM. Talk to, maybe their parents, like you said, their friends who might be, might have a chunk of change in their IRA, and they could actually, in fact, roll that over to make an investment in the fund. Is that correct?
Yep, 100%. So you are completely allowed to do it. Companies like Midland make it easy, and that's our whole goal is to make it easy. There's no tax consequences for for people doing this kind of thing. All you're doing is just transitioning your money from one style to another style, and then you just have to the hard part is just figuring out who you want to invest with, and then the fund manager just making a good pitch.
Yeah.
That's really what it comes down to.
That makes a lot of sense. And in terms of like you kind of covered it already taxes, but in terms of like taxes, and I know there's with the IRA, I believe it's a $6,000 a year contribution. Is that correct?
That is correct. Yeah, for a traditional IRA, Roth IRA, that is correct. Yep. And yeah, so I think when people think about moving retirement money around, like for people that haven't really done it a whole lot, they can kind of get a little trepidation because there's tax consequences for moving the money and doing it too early, and the one year rollover rule. And so there's all these kind of rules out there. But for really just most people, all you're doing is just changing the address from one retirement account to another. And so I bring up the notion of just doing this with existing retirement money. So there are you do have to start out at some point and put money into a retirement account. And the reason that you do that is because you get a tax deduction for putting money into a retirement account. And then when you invest that money within the retirement account, you don't pay taxes. And then when you take the money out, depending on your account type, you may have to pay taxes, but usually it's in your later years in life when you're not really earning an income, and so the tax bracket that you're going to pay is going to be a lot less than it is when you're in your 30s and 40s, and usually in your higher earning days. And so the tax advantages there's a plethora of them, and that's why people have retirement accounts, right? And if you can build up that money and then start shuffling around for different investments, it's a super super powerful tool. Okay. And then transitioning from a 401k at an old employer to an IRA at Midland, or just moving money from any IRA in general, it's not a difficult thing. So you just need to get comfortable with it and just decide what you want to do.
Yeah. And that's a great point with the 401ks as well. It's definitely, something that people should be keeping in mind out there. Now, in
Yeah.
terms of fund managers, is there anything that a fund manager should be thinking about when they're taking money from, a self-directed IRA like this?
Yeah, I think really it's kind of like understanding the operation of it. And so which, not to get pitchy on Midland or whatnot, but just things to think about when you're a fund manager is you really need to consider what kind of IRA company you're dealing with. So whether that's us or one of our worthy competitors out there. There is just we've seen horror stories where people have they didn't really know the flow or the workflow of how this is supposed to happen, and so they just pulled their retirement money out from like a Schwab or Fidelity and gave it directly to their fund manager, thinking that they were putting it into another IRA account, and then now they're getting taxed and penalties on doing that, because everything needs to flow through a custodian, somebody like Midland. And so just understanding the workflows of how IRA money needs to move is really the biggest thing. Other than that, a lot of, I think there's a lot of misnomers and the complexities there of taking on IRA money. The whole operation for a fund manager really doesn't change, whether you're taking, institutional money or individual money or IRA money. It all kind of flows in together and is managed the same. And so again, going my old point, it's really just another bolt in the chamber to raise money. It doesn't really add that much complexity to the situation. Now, the only other benchmark issue that you'd have to worry about is there is this 25% rule out there for ERISA assets. And so basically what this means is that if in very general terms here, if you get over 25% of ERISA assets, and ERISA assets are defined as really employer sponsored money, employer sponsored retirement accounts. So think 401ks, SEP IRAs, simple IRAs, pension plans. If you onboard over 25% of your AUM of that type of money, then you become what's called a plan asset manager, and that takes on a much higher level of fiduciary responsibility. And so most fund managers just try to stay away from that. and then just kind of keep your retirement assets at less than 25% of your fund. Most of the time, that's not really a huge hurdle, but sometimes when you're in your beginning stages, it can be as you kind of ramp up your business and market your fund and, just try to build it out.
Yeah. Yeah, really good point. Definitely something to be thinking about, as you're raising capital. Are there any, we obviously just started 2023. Are there any changes coming into this year in terms of self-directed IRAs or IRAs in general?
Yeah, so it's funny with this question because my 13 years before today, I would have said no, nothing's changed. Contribution limits, will change every now and then, but for the most part, nothing changes with retirement accounts. They were kind of built beautifully, and there's not really a whole lot that needs to change with them, and so there really hasn't been a lot of change. But uh, the CARES Act or the CARES Act that Biden just put in. I hope I got that right. But anyhow, Biden just put in some legislation to make some subtle changes to retirement accounts, but they can be very impactful. So and basically what it is it's adding Roth components to a lot of employer plans. So what I mean by that is IRAs can be of like two formats, or retirement accounts can be of two formats. They can be pre-tax or post-tax. Okay, and so most retirement accounts are pre-tax, meaning that when you put money into it, you get a tax deduction for doing so. And then when you invest that money and invest tax-free, and then when you pull it out, you pay taxes on the money that you pull out at the time you pull it out. Okay, and then there is post-tax, often called Roth IRAs. So post-tax is you do not get a tax deduction for the money going in. So you put $5,000 in a retirement account, you don't get a tax deduction. You invest that money, you make that money tax free, and then when you pull it out upon retirement age, you don't pay taxes on the money pulling out. So it's a very, very powerful tool. You don't get the instant gratification of the tax deduction, but if you can put money away, be successful with your investments over time, then it becomes a tax-free retirement account. So if you can build up, substantial amount of money, then that's, obviously very, very powerful. And so where I'm getting with this is almost all employer plans have always been pre-tax. Okay, so SEP IRAs, simple IRAs, 401ks, have almost always been pre-tax. And then some of these employer plans have matching components to them. So the employee puts money into it, and then the employer can match it. Okay, and the employer match has been pre-tax as well, mainly to give the business incentive to match. Okay, hope
Yeah,
hope
that
I'm
makes a lot of
hope
sense.
you're
Yeah.
staying with me here. And so there's two IRA types that have been around forever, but they've always been pre-tax. The SEP IRAs, it's called self-employed pension. It's basically made for self-employed individuals, and then the simple IRA, which is actually built for smaller businesses. It's basically an easy, cheaper 401k plan for businesses under 100 employees. Okay, these two plans have always been pre-tax, but now they're post-tax. So let's talk like the SEP IRA, for example. You can put 25% of your income up to $60,000 in a SEP IRA account each year if you're a self-employed individual. So 60 grand, like that's a lot of money if you can make the amount of money to put that into it. That used to always be pre-tax, and now it can be post-tax. So in theory here, you can get $60,000 of Roth money into a SEP IRA. Like that's a pretty
That's
powerful like
huge.
amendment, you know. And so same thing with the simple, like employees used to only be able to go pre-tax. I think contribution limits there around 13,000. So you can do, 13,000 of Roth money. So a Roth IRA, you can only put 6,500 in. So it's a kind of a dramatic change there. And also with 401k plans, employers can now match with Roth money. So a lot of Roth action going on in 2023. Not all of it is like happening today. Some of it's going to be rolled out in like a year or two because there's a lot of administrative changes that need to happen like operationally with companies like Midland. But like it's very impactful changes. I think it's great. Roth IRAs are great tools for people that want to take advantage of them. So I love that that the government's embracing it and just like providing more opportunities to get Roth money in there because it's going to help a lot of people down the road. 20, 30 years from now.
Definitely.
So,
That's huge. I didn't realize the limit was that high. So definitely good to know. Is there anything else that people should be thinking about when it comes to self-directed IRAs?
when you go down the path of a self-directed IRA, one thing to consider when you're choosing the company that you want to work with is making sure that they kind of understand what you want to do. And so what I mean by that is, in the alternative investment world, there's lots of different investments out there. Okay. And all these different investments don't really have standard practices. So what I mean by that is, like, there's a lot of standardized legal framework, but operationally, there's not really standard practices out there. So you may have one fund that does things one way, and you may have another fund that does something considerably different. And with that, in the alternative investment world, there's, you can invest in crypto, you can invest in real estate, you can invest in tax liens, you can invest in startups, you can invest in private investment funds, you can invest in gold and silver. So there's all sorts of different things out there that you can do. And not every company is completely equipped to deal with all of them in an efficient way. Okay. Kind of going back to those standards that, like, precious metals is kind of one operational function, and buying a hedge fund is another operational function. And so every company in our world seems to kind of cater to one or two of them and do it in a really good way. So I would just say, when you're out there, do your due diligence to make sure that, they have kind of credibility and some knowledge in the space, to make sure that, you don't hit any weird snafus with trying to teach a company how to do your investment. That should never happen. They should be able to guide you on what you're, trying to do. And so I would say just kind of keep an eye out for that. So just making sure you kind of know who you're doing business with as you, like, embark in the arena of self-directed IRAs.
Got it. It's a wild world out there.
Indeed.
Thank you so much for joining us, man. Where can people go to connect with you and learn more about Midland Trust?
Yeah, so I'd just say keep it easy and just go to our website, midlandtrust.com. I'm easy to find on there. If you go to the About Us section, you can connect with me individually there. Otherwise, you can find me on LinkedIn. I'm pretty approachable. You can email me at B as in Brad, Janet's at midlandtrust.com, or just stick with the website, go there, you'll be able to track me down. All right.
Good stuff, Brad. We'll include all that in the show notes. Really appreciate you joining us.
All right. Thanks, Mike. Pleasure.
Thank you for watching the Alt Funds Investment Podcast. As always, please like and subscribe if you find this information helpful, and let us know down below in the comments what questions you have. Reach out if you're starting an investment fund, and we can help connect you with the right service providers.